Alright, good day class. I welcome you to today's online class. Last week in bookkeeping, we treated trial balance. And we said trial balance is a statement showing the list of balances extracted from the ledger. Why? To test the arithmetic accuracies of the ledgers. And mind you, last time in accounting, we look at errors that affect trial balance and errors that do not affect trial balance. And we say errors that do not affect trial balance include the following, but not limited to the following. One, we have error of omission. Error of omission is a type of error that is committed when a bookkeeper omitted a particular transaction without recording it at all in the book of account. We call it error of omission. Number two, error of commission. Error of commission is a type of error that is committed when a bookkeeper or an accountant in charge of keeping record in an organization carry out wrong posting to a wrong person's account. Error of commission is committed when a particular transaction is entered into a wrong person's account. Let's say, for instance, you are supposed to record 30,000 naira in Kalu's account, but due to work overload or stress or mistakes, you now recorded the 30,000 naira in Carlos account. Then you have recorded the correct amount in wrong person's account. At this point, you have committed error of commission in accounting and bookkeeping. Another error we have error of principle. Error of principle is committed when a particular amount is recorded in wrong class of account. Let's say, for instance, you are supposed to record 300,000 naira in motor vehicle account. You now went to record it. You now recorded it in motor expenses account. At this point, you have committed an error of original entry. We have error of principle. We have error of principle, which I've explained, and also we have error of original entry. Error of original entry is committed when a wrong amount of money is entered into both debit and credit side of the account. At this point, you have committed an error of original entry. We also have error of duplication. Error of duplication is a type of error that is committed when a particular transaction is recorded twice in the book of account. At this point, it is said that you have committed an error of duplication. Error of duplication means what? When you record one transaction two times in the book of account. This transaction might not necessarily affect the balance or agreement of trial balance. Now, error that affect trial balance agreement, we have error of addition. When you are supposed to add, error of transposition. So now, and so on and so forth. We are trying to carry out revision of what you have done. But today we are going to be taking a look at illustration 1 on how to prepare, how to prepare ledger, write off the ledger account, and then prepare trial balance. You know, last week we treated illustration 1. Then this one will serve as what? Illustration 2. Remember, this question is somehow different from the first illustration treated last week, because last week I gave you asset, liability, expenses, and capital to prepare trial balance straightforward. But in this case, you are required to prepare ledger. After you prepare the ledger, you balance the ledger account. Then you now prepare trial balance. Is that taken out? This one is not straightforward. It means you need to prepare ledger first before going to trial balance. Now let's now look at the answers on the board. Now, I said prepare ledger, balance off, and write off trial balance in the book of JP Nigeria Limited. The word limited means a private company. Now the first thing here we have is what? started business with 10,000 naira cash. When you start a business with cash of 10,000 naira, the accounting entry is debit cash account and credit capital account. Now you now come to this place, you have your capital account, credit and debit. You have your capital account. Now for the capital account, you debit your cash account and credit capital account. We have capital, we have cash account, cash and capital account, cash and capital account. Here we have this. Remember your naira sign. As an accountant, your naira sign is very, very fundamental and paramount. You put your naira sign on both sides, debit and credit. And remember your debit and credit too is very important. Please take it very serious and careful when preparing any account. As an accountant in making, you need to be very meticulous and careful with your figures, your debit and credit, and your naira signs. Now at this point, started business with 10,000 naira cash. You debit cash on the under cash account. You put 10,000 on the debit side. This is the debit side or your left hand side. You put 10,000 here. Then you now write capital here. While on the capital account, you credit capital account. Under capital account, you put 10,000 on the credit side. Here you now write cash here. Is that taken out? Good. So that is all with question 1. Now let's go to question 2. Illustration 2 says that cash sales 20,000 naira. We are talking about transaction 2, the second transaction. So cash sales, let's assume you are selling car. Now you sell out your car. Is that taken out? When you sell something as a seller of goods and services, when you sell in cash and receive money, what is coming to you is cash. Then you debit cash account. For cash sales, debit cash account and credit sales account. Remember, we have cash account here already. There is no need to open 2 cash accounts. Since you have your cash account already, any cash transaction will also be recorded on the existing cash account. Therefore, you put your sales here. You debit, how much is it? 20,000 naira. Under cash account, you put 20,000 and put sales. Therefore, if you look at this place, you don't have sales account. Then you can open your sales account. Sales account. Remember your debit and credit. Sales account. Good boys. Now we have your naira sign, the debit side, and the credit side. Are you with me? Good. Now I told you for cash sales, debit cash that is coming in, under cash you put on debit side 20,000. Under sales account, which is sales account, you put on the credit side. Credit side means your right hand side. You put your 20,000 naira here, and that is all as ABC. Accounting is very simple, like what? A, B, C, D. 1, 2, 3, 4. Now let's go to the third transaction. The third transaction says that raw material purchase by check. It means you are buying raw material for you to produce your good. As well, when you buy and you pay, it means your money is going out of you, isn't it? But you are receiving good in return. Is that taken out? So when you buy, anytime you make a purchase, anytime you make a purchase of goods, you debit purchase account and credit what you are giving out. What are you giving out? Is it that you are giving out cash or you are giving out check? But in this case, as a business owner, you are giving out check instead of cash. So when you purchase by check, you debit purchase account and credit bank account. Why are we crediting bank account, not check? Because we make use of check in the bank. Therefore, you debit your purchase. If you look at this place, right, we don't have purchase account. Then we are not required to open purchase account. We now come to this place, open purchase account. We open purchase account. At the same time, you open bank account. Bank account, credit and debit. Remember your naira sign. I told you your naira sign is very, very important in accounting. Don't joke with your naira sign. Now the third thing we have here is what? How much is it? 6,000 naira. When you made a purchase by check, under purchase put 6,000 naira, while under bank you put 6,000 naira also on the credit side. Here on the debit side, you put 6,000 naira under purchase account. Then since you are transacting, you carry out your business activity by check. Then you debit purchase account by putting bank here. While under bank, when we make use of check, you put 6,000 on the credit side because check is going outside and check is representing bank because we make use of check in the bank. Here we have purchase will be here. You put purchase down here. Is that okay now? So finally, we now look at transaction 4, fourth transaction. Says what? Sales by check. It means you sell your good and you sold your good and services and receive check. Now what is coming in is check. You debit instead of you not debit your what? Your check account. But remember, you cannot say check account because we make use of check in the bank. So now check now is not representing bank, or bank is representing check. Is that okay now? So when for sales by cash, you debit bank account and credit sales. For sales by check, the accounting entry is debit bank account representing check and credit sales account. Now when you look at the account, clearly you can see that we have bank account we have bank account already. There is no need for us to open another bank account. We just put the transaction there. So it means that under bank, you put under bank on the debit side, you put 11,000. Here we have bank, we put 11,000 here. And what I'm going to write here is sales because we are dealing with sales and check. You bring down your sales here. And also on the credit side of sales, you put down what? The same amount, which is what? 11,000 naira. And what are you going to put under sales? We have bank. We have what? We have bank. So you can see we are going gradually and we are making progress. Now the last transaction is paid wages. Wages paid by check. You are paying wages. Now your workers, your employees, just like the school here, we are working as a staff. We receive our salary through bank account. Is that taken out? So the same thing applies here. JP Limited is paying the workers by check. Then the wages and expenses. And remember, all expenses must be debited. Therefore, anytime you pay wages by check, you debit wages account and credit bank account that is representing check, which is going outside. Now, looking at the ledger so far, we don't have wages account. Then we open wages account. Remember your debit and credit. Remember your naira sign. Remember your naira sign very well. Now, on the debit side of wages, you put 5,000 naira. You put 5,000 naira on the debit side by putting what? Bank. Bank. Now, under bank also, since check is going outside, it means and anytime anything is going outside, is always put on the credit side. In this case, check is going outside. Since it's going outside, it's on the credit side. And remember, we don't have check account here. The only account that is representing check is bank account. Therefore, you come to on the credit side, put your 5,000 naira. Therefore, you put okay, this is 4,000 naira. We have 4,000 naira here. 4,000 naira. Bring down your 4,000 naira. And here you put wages. You put wages. So that is all about the first question. We said that prepare ledger. The next thing is to write off. Write off means to what? To balance the ledger account. You take debit side minus credit side to get the balance. Now look at it now. On the debit side here, we have 10,000 naira and we have 20,000. You add them together. 20,000 naira plus 10,000, we have 30,000 naira. Now looking at the credit side, we don't have anything here. So it means that 30,000 naira minus nothing is still the same thing as what? 30,000. So now put your what? Balance carried down. That your balance is 30,000 naira. You now put it here, 30,000. So you now balance it. Bring the same 30,000 naira downward. Are you following? Now, you now come to the next account, sales account. On the debit side, we don't have any transaction. But on the credit side, we have two transactions. Now, we have 20,000 plus 11,000. 20,000 plus 11,000 is equal to 31,000 naira. We have 31,000 naira. 31,000 minus nothing on the debit side, it will give us balance carried down of 31,000 naira. We now balance it, we have 31,000 naira. The same thing is applicable to the bank account. On the debit side, we have 11,000. Mind you, when you are balancing your account, you start from the biggest side. You look at it, which side is more. You check for the biggest side. You start from there before you go to the smaller side. Now here, 11,000 here, 10,000. Here is 11,000 is bigger than 10,000. Then you bring down your 11,000. Now when you look at this place, this plus this is 10,000. 11,000 minus 10,000, it will give us a balance of 1,000 naira, which will now represent your balance carried down of 1,000 naira. Then when you add it together, you have the same balance as what? 11,000 naira. Here we have capital account. Capital account, on the credit side we have only 10,000 naira. We balance it. While on the debit side, we don't have no transaction here. It means that 10,000 minus nothing, it will give us what? 10,000 naira. So you now bring down your balance carried down, 10,000 naira. Total it, we have the same thing as what? 10,000 naira. I hope you are following, right? Now the next thing is purchase account. On the debit side, we have 6,000. While on the credit side, we don't have any transaction. Therefore, the debit side is greater than the credit side. You bring down your 6,000 naira. Now 6,000 minus nothing to give us what? 6,000. Bring out your 6,000 here. And remember, this your 6,000 represent balance carried down. You bring out your balance what? Carried down. So 6,000 plus nothing give us what? 6,000 naira. Finally, wages account. We have 4,000 on the debit side, but we don't have anything on the credit side. Is that taken out? Now, we now add it 4,000 plus nothing, 4,000 naira. You can see accounting is simple. Now going to the credit side, we don't have any transaction on the credit side. Therefore, 4,000 naira minus nothing is equal to what? 4,000 naira. So you bring down your balance carried down, 4,000 naira. You balance it, you have what to call 4,000 naira. So for God so loved the world, this is the end of ledger and balancing off of ledger account. So the last aspect we are required now to prepare is trial balance. Let's now go to trial balance, because the question says that prepare ledger, we have prepared it. Balance it, we have balanced it. The last one is to prepare trial balance. Now you now bring, the first thing to bring down here is the name of the company. You bring down the name of the company. That's the first thing you bring down. Bring down the name of the company. We have JP Limited. You now write down what? Trial balance. Trial balance. Trial balance. As at that date you are preparing it, we have what? Now you rule two lines. You have the debit side and we have the credit side. You close it. Remember your naira sign. As an accountant, your naira sign is very, very important. Here is the particular. We have particulars, debit and credit. Now remember the four cardinal rules of trial balance, which states that all assets must be debited, all expenses must be debited, all liabilities must be credited, and every forms of capital base of the business must be credited. Now, what are the examples of assets? We have bank balance, cash at hand, we have plant and machinery, we have furniture and fitting, we have motor vehicle, equipment, and plant, and so on and so forth, investment. Now, we now come to the first one. We have cash here. Cash is an asset. It's a liquid asset and it's a short-term asset. And remember, all assets are debited. You now bring down your cash here. How much is the balance? The balance is 30,000 on the debit side. You see that we are posting cash on the debit side on the trial balance because cash is a current asset. We are done with cash. Then we go to what? Sales. Sales is what? Sales represents income. And remember, all income and gain must be credited. Sales is what? Sales is an income item. We're talking about sales. Sales simply means what? Income what? Item. And remember, all income must be credited. When you sell, you receive money as an income. Therefore, it's an income then you credit it. You bring down your sales here. How much is the balance in sales account? The balance carried down in sales account is 31,000. You put it on the credit side. 31,000 on the credit side because sales represent income. And remember, in accounting, all income items must be credited. Very good. Now we now move to the next transaction. We have bank account. Remember, any balance you have, once you have a debit balance in bank account, it's an asset. Therefore, what is our balance here? The balance we have in bank account, in our bank account, is just 1,000 naira. Therefore, you bring your bank here, write down your bank, and you put 1,000 naira on the debit side. We are moving forward. We are going to a capital. Capital, remember I told you capital must be credited. It's not an asset, therefore it must be credited. You bring down your capital. How much is the balance in the capital account? Look for balance carried down. How much is 10,000 naira? You record your 10,000 naira on the credit side. Now we are left with two ledgers now. We have purchase. When you purchase, is purchase an income or an expense? It's an expense, not an income, because when you purchase, you give out money, then it becomes an expense. And remember, all expenses must be debited. You bring down your purchase on the debit side. We have purchases. How much is the balance? Looking at the balance, anywhere you see balance carried down is the balance. We have 6,000 naira here. Then you bring down your 6,000 on the debit side because purchase is an expense. Finally, for God's all of the world, we have wages. Wages is an expense. Is that okay? Wages and salary are expenses. And remember, all expenses must be debited. What is our balance here? The balance carried down is 4,000. Then we come to this side. We have wages. Wages represent expenses, and the balance we have under wages account is 4,000 naira. Then you now balance your account. We don't have any ledger again. What we are left with now is to balance our trial balance. And remember, your debit side must be equal to credit side. That is the best way to check your performance, whether what you have done is correct or not. Let's add them systematically. On the debit side, 31,000 naira plus 1,000 is equals to what? 30,000 plus 1,000 is equal to 31,000. 31,000 plus 6,000 is equals to what? 37,000. 37,000 plus 6,000 is equals to what? 41,000 naira. Therefore, you bring down your 41,000 naira. Here is the total. Therefore, come to the credit side. The total balance on the debit side is 41,000. Going by the credit side, we have 31,000 naira plus 10,000. When you have 31,000 plus 10,000, you arrive at how much? Everybody, we arrive at 41,000 naira. Good student. Now we have 41,000 naira here. Now looking at the debit side balance and the credit side balance, they are equal to each other. Therefore, this account is balanced and correct. No error. This is what I am expecting from you. You copy your notes. I will send your assignment over to the Google Classroom. I'm expecting your questions. Is that taken out? I want you to challenge me. Challenge me. I'm expecting your questions. So it's only your challenge that can improve me as a teacher. Question me, challenge me. I expect much from you. My regards to your mom, my regards to your dad, and I love you all, and I wish to see you soon. God bless you. Remain blessed.